Hey guys, it's Tony, Gordon. We're here to talk a little bit about taxes. Specifically today, we're going to talk about the tax cut program that has been in place for the last 5 years. It was started under the first Trump administration, was continued, and is due to sunset or end at the end of 2025. Now, many of you have taken for granted your standard deduction. If you're married filing jointly, $29,400 is your standard deduction. You get that. You don't have to itemize. It just comes off your adjusted gross income. You pay tax on what's left over. If that goes away in December, next year your standard deduction will be $12,200. What does that mean to you? $17,200 more dollars will be taxed. Most of you are in the 20% bracket. That means $3,400 more tax you'll need to pay on the federal side. And again, that can make a significant difference in your life. So we're going to talk about, does this mean there's more inflation? Does it mean that it's not going to be renewed? And we're going to give you some of our insight as to what we think is going to happen, and especially on this new administration, what I think they need to make happen.
Well, one of the biggest topics there also, too, is the SALT and how that kicks in. Because in reality, that $29,000 standard deduction, if you live probably in 47 out of the 50 states, it's a great deduction to have because the bulk of what you've got on your itemized deductions is made up of mortgage interest.
Right.
So unless you're living in a state like California, Hawaii, or New York, where you're paying so much for real estate that your mortgage or your interest is incredible, that it allows you to go ahead and itemize because you're going to fall above that 29,000. But for the other states, it just makes no sense. And like you said, it's a penalty if that drops all the way back down to the standard deduction of 12,000. So,
right.
My own opinion is that I believe that Congress has no choice but to go ahead and renew that. The impact is on definitely middle America itself.
Exactly.
And I think a lot of people just need to understand that too.
Yeah, we talked about SALT. He's talking about the state and local tax limit of $10,000, which means that, like in California, we have high property taxes and we have high state taxes. So, example, my property taxes are almost $10,000. That means all the state tax that I pay, I can't deduct because it's capped at $10,000 of a deduction. Now, many of you live in states that don't have state tax, so you can take all of the property taxes that you pay, especially places like Texas and Florida. They don't have state tax, so you're allowed to deduct up to $10,000 of your property tax. Or in California, we don't deduct one or the other pretty much, and we're capped. So this is the thing that a lot of people are saying they want to get rid of the SALT, but this was started because states kept raising their tax rates knowing that we could write it off on the federal side. And the Fed said, no, that's it. We're capping you at 10 grand. So if this goes away, as to Gordon's point, many of you that live in places that aren't so heavily taxed like California, New York, and Hawaii will have a dividend if it continues, or will pay a penalty if it goes away. Now, if you're single, it gets even worse because single right now is $14,400, and that's going to drop to $6,000. So now all of a sudden you got $8,000 more dollars you're going to pay tax on. If you're making any kind of money, you're at a 20 or 24% bracket, $1,600, $2,000 more out of your pocket. So if you're paying more in tax, are you spending more on yourself? No, you're not. It means you're giving the government more money, and we're seeing how well they're spending the money. I look at the trillions of dollars they found that they don't even know what they spent it on. I'd much rather have the money in my pocket. What do you think, G?
Oh, absolutely. And you'll hear all the talk that a lot of the tax cuts are geared mainly towards the high earners. But when in reality, all of these impact is really going to have it on the lower or middle American middle income families itself. So definitely a big savings that's there. So a lot of what I believe is disinformation that's out there that people are barking, all of these are being done for all of the billionaires that are out there. That has little impact on them.
It has no impact.
The biggest impact is going to be the middle income people throughout, which makes up most of America.
Yeah, it's 90%. And if you look at when they talk about tax cuts for billionaires, if you make $1 million, you're going to take an itemized deduction because you have a corporation or a company or other things. This is not even relevant to you. It doesn't matter what the standard deduction is. It could be zero. It could be $100,000. You're still not going to take it. You can take the itemized.
Absolutely.
But for you and me and 99% of the people watching this is going to make a difference.
Well, and it kind of leads into what they're talking about, or what Trump has really talked about as far as some of the new tax cuts that he'd like to be able to see come into effect for 2026, which I totally agree with, because number one, you're talking about Social Security.
Oh, yeah.
Non-taxable.
Huge.
It should be. I mean, most of these are our senior citizens. Why are they having to pay tax on income that they contributed and paid tax on the first time itself? So we're taxing them twice for that same money. Tips. I think that's a great one. I don't know whether or not that's going to get through, but I think there's going to be definitely going to set in some caveats on how that's got to work, because obviously then we'd be all switching to paying ourselves on tips so that we don't have to pay taxes on them. But you've definitely got workers that are in the industry, such as your servers and so forth. Hey, that bulk of their money comes in from tips itself, and what's unfair to them is a lot of employers will pay them a whole lot less because they know they're getting tips.
They avoid the minimum wage contribution because they're a server and they're tipped employees, and this would make a difference. And Social Security, the majority of our clients that are on Social Security need that to live.
Right.
And when you tell them, hey, you made $38,000 Social Security, but I got to tax 85% of it, it really hurts them. It's only a couple of $1,000s, but it would make a huge difference to people that live check to check. And when you talk about fixed income, when we say that, it means you're not getting a raise ever in the rest of your life. This is what you've got, and you've got to make it last. And too many people are running out of money. Now, you could say, well, they didn't plan this, that. Hey, I wasn't walking in their shoes, but I know that, hey, we taxed them 40 years ago, 30 years ago, 20, 10 on all their Social Security money. Now we're taxing them again. And to your point, it's a crime. It should just be tax-free. It would make a huge, people would take it sooner. They'd get on it sooner. They'd get the financial help they need. Many people don't take Social Security because they don't want to pay the tax, because they're still working. And a lot of people are working till they're 70 because they can't afford to not work. This would help them. And again, this has nothing to do with the rich. Again, if you're rich, you could care less about Social Security. This is, when you hear people talk about this, it's such misinformation, because this is about everybody, not the rich. This is except the rich. It's the opposite of what people are saying.
Well, and it's amazing as you look throughout, again, the United States, how many people have to survive on Social Security.
That's it.
I look back at going back to like our grandparents. That's all they had was Social Security that was coming in, and you had to live off of that. Well, with inflation and everything the way it is today,
can't make it.
It's tough to survive on something like that.
You can, and with the rising cost of Medicare and things that come out of Social Security, last year, they get a 7% increase. It was great, but then the Medicare went up $400 a year. So it's like, well, you ate into that 7%. I think that if we can really look at the truth of the matter, it would clear up things for people, but they hear what they want to hear. And we see it every day with people, how they live their life. And the majority of people are not rich. The majority of people have to have Social Security to live. And this would free up. And the majority of servers that we see aren't making $1 million. They're making $30,000, $40,000 in wages. And the tips is what they live on. If we can make that tax free, again, the more money people have, the more money they're going to spend to make their lives better, which helps all of us. We look at interest rates, right? Interest rates, when Trump was here the first time, was 2.5%, 3%. I know I've got a loan at 2.25%, 30-year fixed. Now they're at 6.5%. Well, that means that my payment is 3 times. If I got a loan today, it'd be 3 times what it is today. I couldn't afford the house I live in. You couldn't afford the house you live in. This is keeping everybody out of the market. And they said they raised interest to stop inflation. Well, where are all the prices gone in the last 4 years?
Absolutely.
So one has nothing to do with the other. The interest rate thing and, inflation, I'm sorry, that's incorrect. Because if you look at when interest rates were low, we didn't have inflation. We had a robust economy. Housing was booming. All the ancillary services were booming. Now, COVID didn't help us. I got it. But COVID's over. And we're the last known, if you say developed country to be lowering interest rates. Europe's already done it. We're just kind of slow. And I'm wondering, why do you think that is?
Well, again, the government printed a whole lot of money.
That's the inflation right there.
And that's what created the inflation, with all of the packages and free money that was given out. And obviously we can't, go into even all of the money that was stolen from the government that they, now they're going to try to claw back from some places. And the money is gone in a lot of instances itself. But just printing that money increased the inflation that we have.
Correct.
It just one correlates with the other.
Right.
And I think if government gets control of their spending and is able to reduce what the costs are out there, we're going to see inflation, start to ratchet down itself.
I agree.
And I think we're going to see then at that point interest rates start dropping as well.
Sure.
So the big question then becomes what happens on the housing side.
Mhm.
You know, are we gonna see now housing prices increase because rates are down?
Sure.
Yeah.
I think so, because you don't buy a house on the price, you buy it on the payment. And how much can I afford a month? That's the house I'm buying, right? So the lower the payment is, the more house I can buy, which it gets more people into the market. You start in a condo, and we're talking California and Hawaii. That's where our offices are. So here in California, in Southern California, to buy a condo, probably $700,000. To buy a single family house, you're probably six figures or seven figures. That's out of reach for most people, especially at 6.5%, because now you're talking about a $12,000 to $15,000 a month payment. Whereas if at 2 or 3%, now you're talking about a $4,000 payment, much easier to reach. I think that will help us. And to your point, when you make trillions of dollars of money, you just print, and now you don't know where it is. I mean, that's the thing that gets me is we don't know where this money went, but we got to pay people. Well, what did it go for? We don't know. It's crazy. If I ran my business like the government, we'd be out of business, right? But I think the inflation came from that, not from interest rates. And I think that the lower the rate, the more the economy is going to spend, the more refis, the more new purchase, more people building wealth and housing. It'll take the break off of all of the rental. Right now, rental's getting killed because there's nowhere to rent because nobody can buy. Everybody has to rent. And it just makes the price go through the roof, supply and demand. I think if we can get that under control, the rent prices will go down, which will help the even lower class. It'll never be homeowners. There's a whole swath of Americans that can't ever buy a house because they don't have the income to do so, but they need an affordable place to live. Well, it's kind of hard to find that when people keep bidding up the price because they want to live where you live.
Right.
And they can't buy, but they have the money to rent something nice and drive up the price.
That's why I think the next 12 to 15 months will be interesting to see what happens once a lot of these policies that the Trump administration is putting into play right now, because change doesn't occur overnight. You may be able to push some of these, but the ripple effect is going to take a little while. And I think he alluded to it without coming out definitely and saying is that there's going to be some pain before there's some gain.
Oh, absolutely.
That's going to come in there. And I think if everybody understands that and realizes that and knows that, as you referred to, you know, what was it like during his first term and what happened with interest rates in the economy, you know, he's got to fix what's happened with the last administration, try to unwind some of it, which takes time. Yeah. You're seeing the fluctuation in the stock market because everybody's just not sure what's going to happen. And obviously he's playing with all of these tariffs and everything that's sitting out there and what impact that's going to have. I believe with the manufacturing, with these companies that he's bringing in, we're going to see more jobs that are become available, more high-paying jobs because they're tech-related and so forth. So I believe the economy is going to make an adjustment itself. The question is, can they maintain it once it gets there continuing forward?
I agree. I think that to your point, too, with the tariffs, I think he's playing a game of, I can bring back all the things that are being overseas. Because what people understand about tariffs, example, Canada tariffs us 300% for produce that we send to them, 300%. So if it costs us $1, they're charging us $3 for the joy of selling it to them. So we have to understand most of these tariffs are reciprocal. We've never had these before. And now the countries are freaking out, like, how dare you? Well, I'm just coming up to where you're not even close to what you're doing. I think that if he can level that playing field a little bit, he'll bring in more capital here, either through more tariff money or people bringing stuff back here because it no longer makes sense to make it in Canada or Mexico and then ship it to California or the United States. It makes more sense to make it here to avoid the tariff.
Right. And everything uplifts. You know, obviously, I think everybody benefits. And again, you're going to see a lot of it that's flowing through to the middle income people because you'll probably see increases in pay.
Oh, sure.
Itself. Which means hopefully more money in your pockets. I'd love to see him put into effect that $150,000 and less no income tax itself.
Oh my God, would that be a game changer for 90% of America?
Right, exactly. But again, you've got to be able to see if Congress is going to go ahead and approve something like that.
I think it'd be huge. I mean, now you're talking about excluding the rich and only focusing on the middle and lower class and saying, hey, you make less than $150,000, there's no tax.
Yeah. Agreed.
Of course, it cut into our business substantially. We'd have a lot less tax returns to do.
True.
But I do think that, you know, he's on the right track. I think the economy will go the right way if everybody can just get off the disinformation train about this is only for the rich. I have yet to see one of his policies be targeted to the rich. Matter of fact, everything he's doing is excluding the rich. And I think the more people need to understand that is quit listening to people screaming about, oh, he's only giving breaks to billionaires. I haven't seen one policy giving a break to anybody that's making over 7 figures, let alone billionaires.
Right.
I just think that we should look at what the actual guts of it is. And so far, it's all middle and lower class relief, which is where you and I live. And I think that's where majority of our people watching today live. And you really need to take it for what is being done, not what's being said. And as far as the money they're finding, God, I hope they keep going and can stop. You know, we're paying people, we don't know who we're paying.
Right.
What did they find? 4.7 trillion that were paid out with no name or number where the money went.
Well, and everybody's concerned, like Social Security, Medicaid, Medicare, and those, a lot of it is just bureaucracy spending that's happening there. You know, I think what he's trying to stress is that it's not going to impact the payments that are coming out to everybody. Those payments are not going to stop. You've earned it. It's coming to you. I think what it is more is making it much more efficient so that we're not always hearing, oh, Social Security is running out of money. We're going to have to figure out what we're going to do there. If you cut some of that expense out, you've got the income that you need there to go ahead and pay it out.
And you take the trillions that he saved already and you put that into Social Security or Medicare, it'll be self-sufficient for generations to come. And he's not talking about changing any of that. If anything, if he goes to the 150 tax-free, he's going to put school out for everybody. I mean, oh my God, could you imagine? I mean, the average person at 150,000 now is paying 30 in tax, federal and state. And now all of a sudden it's in your pocket, that'd be a huge deal.
Absolutely. Let's talk about another thing that I think a lot of people still don't realize yet, because it had to do with the payroll tax laws being changed a few years ago.
During COVID?
Yeah, and the fact that what happened is, you know, payroll taxes were actually lowered. So in other words, for your paychecks, they were taking out less money. Now, they didn't tell you that, okay, and neither did HR or your payroll department. You really didn't notice it until it came time to do your taxes, and then all of a sudden you've got a tax bill there because you didn't have any money taken out. And they've changed that W-4 form so that they make it difficult, because you used to be, hey, I'm married, I got 2 kids, I can claim 4, I should be about break even for the year itself. Doesn't work that way anymore.
Right.
You're still not having enough taxes taken out. And a lot of people don't realize there's that line 4 that says, hey, you need to go sit down with your tax preparer and figure out how much more taxes you may or may not need to have deducted from your paycheck on a weekly, bi-weekly basis, whatever the case may be itself. And I know with our clients, we've walked them through that process. It's amazing how many W-4s we've had to change over the last 3 years.
Oh, yeah.
And it continues to have to change because you try to dial it in. The whole idea that we work with our clients is we want to get as close to 0 as possible.
Right. We don't want to owe, because then we have estimates, but we don't want to add 10 grand back either.
Right.
We dial that in. And what people don't understand is if they work 2 jobs or they're married and they put married and I'm married with 2 jobs, they're getting even less taken out. As I tell all my clients, until we know, claim single with no dependents. Even if you're married to 4, let's figure out where we are, because if we get you to a refund status, I can always dial that back. But if I get you to owe $1,000 or more, now you got estimates. And if you don't make any estimates, now you got penalties. And the IRS is ratcheting up the penalties now, 8%. That, you know, it adds up. People don't understand. Why am I paying an extra $600? Well, those are the penalties for not making the estimates. You know, in the great line, you never told me.
Right.
Well, we printed the estimates for you and gave them to you. So I think people need to understand at COVID, they lowered by almost 20%. The take-home money that you had withdrawn from taxes, they lowered by 20%. So you got 20% more money. Well, over a year, that's a big difference. If you're making $40,000, you got $8,000 more dollars that should have been the tax went to you. And that's the problem, is now at the end of the year you owe, and you can't understand why, and you yell at us saying, what'd you do? We didn't do it. It's the government that did this. They didn't tell you about it. They wanted to give you more money during COVID. That was their plan. And the unintended consequences were you owe.
Right. And that's why I think it's important also, too, because we tell all of our clients, you know, with your tax professional, you should be meeting with them sometime during the middle of the year.
See where you are.
And see where you are. You know, you should be able to run a pro forma tax return at that point saying, hey, I'm halfway through the year. If the second half were to be the same, what am I looking at from a tax standpoint? Because now that allows you to go ahead and make adjustments.
Absolutely.
Okay. And the biggest one, because, you know, 90+% of our clients are either self-employed, okay, or they have a corporation, an S-Corp or something like that, where they're taking out distributions. And what we need to do is dial in the estimated tax payments. A lot of people don't realize that you need to make those. And then all of a sudden you're waiting until the end of the year and you're getting a nice little penalty for not paying in any estimated taxes during the year itself too.
Correct. And I think the other thing we see is a lot of retirees, their first year being retired, they were W-2 their whole life. Now they've got a 401k and a pension, Social Security, but they don't withhold any tax on those. They don't know they have to or should. They get $100,000 in retirement income and they got a $20,000 tax bill and they're freaking out. And what we try to explain to people, when you retire, you need to tell me and we need to sit down and plan, because you can withhold on all of those things so that you lessen your tax burden.
Well, absolutely. Same thing with Social Security. 10%. Obviously we want to see it go through where none of it is taxable, but a lot of people don't realize you can make the phone call to Social Security Department and say, hey, take out X% out of each one of my checks so that I've got withholding there as well.
On the federal basis, that's right. And they'll do up to 10, I believe. Mm-hmm. And they won't do state, but like on your 401k or 1099 retirement from your pension or anything else, you can tell them, hey, 20% in the Fed, 5% to the state, whatever you want, to make sure that we're in that small refund window. Yeah. And again, it's meeting with your tax professional to do this. It isn't, people... I think people have a hard time thinking of tax professionals as available all year long. We actually work all year long. I know you only see us in March and April, but we're here all year long to answer your questions, to give you guidance, to make sure that when we meet in March and April, it's going to go the way we've discussed it the year before. This is the biggest challenge, I think, for everybody, is you need more contact with your tax professional. And if you're doing taxes yourself, God bless you. If you're a simple W-2 and you don't own anything, that's great. But if you are married, you have children, are going to have children, you're going to buy property, do yourself a favor, spend a little money on yourself, hire a competent tax professional to help you and guide you through this and set you up for success. Don't wait till you look like Gorden and I to figure out that you need help.
Absolutely. The last thing I'm going to throw in here too is that there's something called an effective tax rate. We hear all the time that people are throwing out there and saying, oh, I'm in this tax bracket, 20%, 24%, 30%. But really the bottom line that you need to ask your tax professional is, what is my effective tax rate? In other words, out of every dollar that I earn, how much do I have to pay in taxes? Yeah. Because remember, we have a tiered system. And so just because you cross, a lot of people think, I crossed into the 24% this year, I'm going to be taxed 24% on everything.
No, it's not retroactive. Just that dollar's 24.
So it's that effective tax rate that is the key thing there, because then we utilize that number for your retirements to figure out how much money we need to withhold, for your W-4s to figure out, okay, here's what we need to go ahead and recalculate. And so that's an important thing, I think, that you need to talk to, because that is the number that you're playing to and not exactly what tax bracket you're in as well.
The tax bracket that you see would be the last dollar earned, what it was taxed at. The effective rate is the blend of all of your dollars. So from 0 to 24, all in between, all the buckets in between, we total those up total and say your bracket is 15%. That's what we plan on. If you guys have, and the one thing my producer Richard's telling me here right now, he says, if you have questions, please put them in the comment section below. We try to answer as many as we can. And again, we're here year round to help you. Don't be alarmed at numbers that you don't understand. See a tax professional to understand the numbers being presented to you so you can make the intelligent decisions for tax planning and to grow your future. Too many people come to see us that have never thought about taxes the year before in 24. Now in March of 25, they say, hey, here's my 24 stuff. How'd I do? That's not the plan. That never works out well. Come see us now about 25 so we can plan. So when you go to file, we're all good. The last thing I want to tell you guys is we're here all year round. If you have questions, leave them in the comment. Do click the subscribe button so we can make more videos. If there's a topic that you'd like us to cover, leave it in the comment section and we'll get to it in a future video. For now,
Mahalo.
I'm Tony.
Have a great day.
Be good.